I'm Dr. CMA Aruna Devi, Department of Commerce, Professional Accounting. In today's session, we will see about the accounting basics. First, let us see the definition of accounting. According to AICPA, accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money, the transactions and events which are of a financial character and interpreting the results thereof. There are some features of accounting. Let us explain the definition of accounting as features. First one is art of recording. Art of recording means as a human we cannot memorize all the things and we cannot remember all the things at any time. Hence, recording is essential in accounting. So, it is an art of recording. So, recording means journal entries. Writing journal entries is the art of recording. So, in double entry system, there is a debit and the corresponding credit. Hence, journal is required for remembering the things. Second one is art of classifying. Classifying means we are writing all the transactions in journal book. But we have to classify as purchases, sales, purchase returns, sales returns, creditors, debtors, like that. So, art of classifying means we have to classify the accounts. So, in ledger accounts, we are classifying the transactions into purchase account, sales account, purchase return account, etc. Next one is art of summarizing. It is prepared, that is trial balance is prepared for summarizing all the transactions. The main purpose of preparing the trial balance is to know the arithmetical accuracy of the transactions entered. So, if there is any error is in journal or ledger, it will be depicted in the trial balance. So, but some transactions will not be depicted in the trial balance. That is why to know the arithmetical accuracy of the transactions, we are preparing trial balance. If the trial balance is imbalanced, it is not balanced, then we should assure that there are some errors and mistakes in journal and ledger. So, we have to verify these two, that is journal and ledger. The next one is in a significant manner. We cannot write the journal or ledger as it is. We have to follow the accounting principles. That means accounting concepts as well as accounting conventions. So, by following the accounting principles, we have to enter the transactions and classify the accounts. Then in terms of money, we cannot enter all the transactions in financial accounting. If it is, that is the money is involved, then only we can write the particular transaction. So, only monetary transactions are entered in financial accounting. The next one, transactions and events. So, art of recording, art of classifying, what are to be recorded, what are to be classified and what are to be summarized? All the transactions and events that are happened in the business every day. So, everyday transactions and events are entered in journal and ledger. Then, last one is interpreting the results. So, we have to analyze the results with the previous year balance sheet, that is previous year financial statement. So, the financial statements of current year and previous year may be compared and it can be interpreted, or the financial statement of firm A can be compared with the financial statement of firm B. So, comparison is possible and analysis is possible, and through analysis and comparison we can interpret the results. The following are the objectives of accounting. First one is record maintenance. Record maintenance is essential for accounting. And second one is financial statements are prepared. Financial statements contain, as per Indian Companies Act 2013, financial statements contain statement of profit and loss, statement of balance sheet and statement of equity, notes to accounts, cash flow statement. Okay, so these are the financial statements as per Indian Companies Act 2013. So, in this, statement of profit and loss is prepared to find out the financial profitability position. So, to know the profitability position, statement of profit and loss account is prepared, and to know the solvency position of the company, balance sheet is prepared. Okay, and financial account is useful for all the stakeholders, internal stakeholders or external stakeholders. Internal stakeholders include management, owner, employees. Okay, these are internal stakeholders. External stakeholders means creditors, long-term creditors as well as short-term creditors, shareholders, prospective investors, customers, government, banks, etc. Okay. There are three branches of accounting. First one is financial accounting. Now we are seeing that. Then second one is cost accounting. Cost accounting is prepared for cost ascertainment and cost control. The main objectives of cost accounting are cost ascertainment and the cost control. Then next one is management accounting. We can simply say the accounting for management. So this accounting is prepared only for management, which is useful for decision making. So these are the branches of accounting, and among these three, financial accounting is compulsory and mandatory for all the companies. Cost accounting is mandatory for the companies having 35 crores of turnover. There are two methods of accounting. Number one is double entry system and number two is single entry system. So while you write journal, there are two sides, debit side and credit side. So for every debit, there must be an equal and corresponding credit. So compulsorily for every debit, there must be a corresponding credit, right? So that is called double entry system. Then single entry system means they won't follow the double entry system, but they will write only the required things. That is only personal accounts are entered. Cash account and personal account are entered. No nominal and real account are entered in single entry system, right? Then basis of accounting. There are three bases of accounting. Number one is cash basis. These three are acceptable. First one is cash basis. Usually professionals like lawyers, auditors and doctors will follow this method. Apart from auditors, lawyers and doctors won't know the basic accounting principles. They don't know the basic accounting principle or double entry system. Whatever the principles and concepts we are following, they don't know. So they are following cash basis of accounting. If they receive any amount, they will enter on the receipt side. If they pay any amount, then they will enter in the payment side. So if the cash is received and coming inside, then it is entered in the receipt side. And if cash is going out of the business, then it is entered in the payment side. If cash is not going out, they won't enter, right? So if cash is involved, then we can enter under cash basis of accounting. But under mercantile or accrual basis, for cash basis, the best example is receipts and payments account, which is followed by lawyers and doctors. Then second one is mercantile or accrual basis. This is the method followed by the business people. Best example is profit and loss account. So in profit and loss account, for example, I will take one example, that is salary. So I'm going to write the salary on the debit side of profit and loss account. This salary includes salary paid as well as outstanding salary. Why outstanding salary is to be included? Because the salary which is outstanding is also for the particular financial year. That is why in order to find out the correct profitability, the expenses which are related to the particular period should be entered. That is why salary paid along with the outstanding salary are entered in the debit side of profit and loss account. So not only the paid amount but also accrued amount, due amount will also be included. That is mercantile basis of accounting. Even though in the receipt side the amount received or not, but the amount is for the particular financial year, that will be included in the receipts, that is which are entered in the credit side of profit and loss account, right? Then last one is hybrid or mixed basis. If the cash is received, it will be entered. But for payment, even though it is not paid, if it is due, that will also be included. So for receipts, cash basis of accounting is followed. For payments, accrual basis of accounting is followed. That is why it is called hybrid or mixed basis. And next one, types of accounts. So for every accounting professionals, we must know the types of accounts. There are three types of accounts. First one is nominal account, and second one is real account, and third one is personal account. Personal accounts are divided into three: natural person account, artificial personal account, and a representative personal account. Let me explain one by one. First one is nominal account. Debit all expenses and losses, credit all incomes and gains. So here expenses means salary, wages, rent, telephone charges or electricity bill, selling expenses. So whatever may be the expenses will be as per nominal account, we have to debit. Then credit all incomes and gains. It may be direct income or it may be indirect income. That is, direct income means sales. Indirect income means dividend received, rent received or interest received, commission received. They are all income. So we have to credit all incomes and gains. Then next one is real account. Debit what comes in and credit what goes out. So usually in the balance sheet we are entering the items which are as per the real account. So examples: machinery, building, furniture. Okay, they are coming into the business. That is why we are debiting this. So all assets are debited as per real account concept, and all liabilities are credited. Capital is credited, loan is credited, sundry creditors, bank overdraft. So all liabilities are credited as per real account concept. So all assets are debited, but all liabilities are credited under real account concept. And last one is personal account. So under personal account, debit the receiver, credit the giver. Okay, the receiver is debited and the giver is credited. Okay, that is why creditor is credited and debtor is debited. Sundry debtors. Who are sundry debtors? If I sell the goods to you, that is Mr. X. But Mr. X has not paid any amount yet. Hence, X is called debtor. So in this case, I have to debit the debtor name. That is X account debtor to sales account. Okay. Same case, if I purchase goods from Mr. Y on credit basis, I have not paid the amount so far. So in such a case, I have to debit purchase account and credit the creditor name, that is Mr. Y. Purchase account debtor to Mr. Y account. Understood? So creditor is credited, debtor is debited. That is why receiver is to be debited, giver is to be credited, right? And there are three types of personal accounts. Number one is natural persons. As I told you in the example, Mr. X, that is who is a debtor, and Mr. Y, who is a creditor, or natural persons, that is individual persons, human beings. So natural persons. And second one is artificial persons. Canara Bank. If I deposited amount into Canara Bank, then what is the entry? Canara Bank account data to cash, because the cash is going out of the business. That is why it is credited. So Canara Bank account data to cash account. Here Canara Bank is personal account, that is artificial person account. Okay, if I purchased goods from ABC Limited, ABC Limited is an artificial person, right? But it is a personal account, artificial personal account. So here also purchases account debtor to ABC Limited account. Purchases nominal account and ABC Limited is personal account. Then last one is very interesting one, representative personal account. What is representative personal account? Okay, if the company has not paid salary for a month. For example, each and every company has their own principles and their own practices. Like they will pay the salary at the end of the same month. For example, now the month of salary will be credited to the employees at the end of the same month. Okay. For example, July month means July month salary will be credited on 31st July itself. But sometimes some companies will follow otherwise. That is, the next month beginning, the salary will be credited to the employee's account. So, in such a case, salary is outstanding. Outstanding salary. So, here there are 1,000 employees in a particular company. We cannot write all the persons of all the employees' name in our journal entry. We cannot write separate entry for each and every employee. That is why it is representing, that is outstanding salary. The term outstanding salary is representing 1,000 employees. So, outstanding salary representing 1,000 employees. Understood? So, here representative personal account example is outstanding salary, prepaid expenses. Okay. So, we cannot write all the person's name. That is why in representation of all the 1,000 employees, we are writing outstanding salary. So, this is representative personal account. So, some exercises may be given to identify which account it belongs to. It may be nominal account, it may be real account, or it may be personal account. So, you should know to identify what type of account it is. Then only you can understand the basic concepts of accounting and you can do accounting in a better way. Thank you. Thank you very much.